the gold market has been very volatile, with the gold price in US dollar terms falling 6% or over $150 per ounce to date. Gold suffered its biggest drop in 5 months after the Federal Open Market Committee, or FOMC, signalled it would speed up its expected pace of policy tightening. Markets were surprised at the scale of the adjustment to the Fed policy forecasts, and Treasury yields backed up steeply, spooking risk sentiment and taking equities lower, gold sharply lower, and sending the US dollar spiking sharply to the upside. In terms of demand, the price action has yet to translate into a significant upswing in wholesale demand. India remains in a steep discount and still largely absent from the market, while China too was in a discount for several weeks, dampening demand for fresh bullion. In the last week, the Chinese market has swung back into premium, and here at the Perth Mint, we are now seeing interest from bullion bank clients. Elsewhere, we would expect the lower price level to drive renewed demand across Asia as consumers look to replenish stocks that were liquidated during the price surge in April. It is important to note that Chinese demand was largely absent in 2020, as the country's demand, like most markets globally, was severely impacted by COVID-19. Having traded at a discount for much of last year, the Chinese market moved back into a premium in early 2021, as demand gathered pace on the back of a more optimistic economic outlook. While Chinese demand was robust, the other giant in the industry, India, saw demand plummet as the world's second biggest bullion consumer grappled with a surge in coronavirus infections. Indian demand rebounded strongly in the first 4 months of the year, before the country was once again thrown into lockdown, albeit shutting down retail demand. Retail demand for silver products remained very high, although demand did soften as the silver price rallied back above that $28 per ounce in US dollar terms. This provided the opportunity for the refinery and our coining divisions to fabricate and convert inventory into smaller cast bars and coins that had been run down due to that initial wave of demand.